Good morning, traders. It's 8:03 a.m. Chicago time on the 10th of August 2021. It is Tuesday, episode number 2048. Thanks for joining me today. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, third day in a row, we've had a mixed market on the open. There's a slight lean towards the overnight risk posture being for risk allocation to risk, with the 10-year note and the bonds off just a few ticks. But overall, the overall market has, the S&P has actually taken a dip across the board. The indices have taken a pretty decent dip, about 10, 11 points yesterday at about 8 o'clock Central, and they've recovered another V-bottom type of activity. Yesterday, of course, was completely sideways after the open. This morning coming in, nothing major on the pre-market. Action, and a few of the things that you want to pay attention to are the infrastructure vote, which is occurring at 10 a.m. Central today, I believe, if I'm not correct. I think 1600 British Standard Time. So about 10 o'clock Central, 11 o'clock Eastern. The infrastructure vote today. China's COVID moves, as well as the corporate bond market in China, are really causing the market to see some hesitation. The overnight repo, the reverse repo market, is very sizable according to the Wall Street Journal. It is over $1 trillion that is exchanging hands currently in the repo market, the reverse repo market. There's a lot of action in that market. It is massive. So those are the things you want to pay attention to. And of course, the debt limits also in view. That is again being politicized. The overnight session, relatively light volume, 111,000. And if you may have noticed that the S&P has had incredibly light volume, 600,000 or so the day before yesterday on Friday, and then yesterday we had about 500,000 contracts traded versus 1 to 1.1 million, which is the expected rate, or the expected volume. So that's where that stands. The S&P has a P-shaped this morning, as P-shaped, 111,000 contracts. Overnight inventories short 94% yesterday. It was short 100%. And we saw an immediate rebalance on the open before a drive down. Yesterday had an open drive, test up, drive down, opening type. Tighter range in tonight's session than it was in the prior session, just 12 points. The point of control at 44.25 and a quarter. I believe yesterday's was at 44.21. Markets completely in balance this morning. So that's where we stand here. Let's take a look at what was expected yesterday versus what we got yesterday. Primary scenario, given the overnight posture and given the fact that we were opening just above the mid VWAP and the overnight point of control, the expectation is we're likely to breach the 29.5 high, pull back, and continue into 38 and 41, 38 to 41. That was the primary scenario. That did not work out. The secondary scenario is to rebalance, breach the 29.5, and then get an impulse down. That is shown right here. Get an impulse down, come back into the overnight point of control at 21, 44, 21, and then work its way towards the 15 below before the bounce. And the secondary scenario was not spot on, but relatively close. Those worked out pretty decent. Here's what we saw yesterday. Let's clean this up a little bit. So you can see here the market opened at 28.50. Remember, 29.5 was the overnight high, and it pushes to 32, pushes directly into 32, and then comes right off. And what is a drive? This is what's called an OTD, opening type, open test drive. It opens, tests in the direction of a prior level, and then we see a drive in the opposite direction. You can tell it's a drive given the action. Very, very strong bars, Renko bars, and pretty relatively strong delta to the negative side. Delta swing of about 6,000 contracts right at the open before it consolidated. The first opportunity I saw is to get short the continuation right here against the zipper, but I've got to be honest with you, it was too quick. It was too quick to get on that short around 1975, 20 even. But even then, it only went down to 1675. Remember, the target was 15 below, right here. 15, this low volume node right here. That was the key target below. It swings back up through the mid for the session. Let me turn that light on. Swing back through the mid for the session, kind of pushes us back on our heels, and that, hey, maybe the selling is done. Puts in a higher low. I looked for a long at 2150, and it looked good until there was the second 3,000 contract sweep. And I don't know if you guys noticed, but there's been a lot of sweeping in the book lately. These 3,000 lots coming in and just indiscriminately sweeping the market, basically market orders that take out about 6 ticks or so. Sweeps down on the long setup on a higher low on the breach of the mid, and the expectation is to push towards the open, which was 28.50, and then to start moving towards the high of 32. That was the expected trade right in here, and it swept down, consolidated, and frankly, it just got too much to sit there and watch it go sideways, and it finally created a nice little zipper here for a breakout above the mid, zip, 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 pull back to the mid, and then break out to the upside, and then it finally looks like it's going for the IB high. But guess what? Yesterday was a 0.026%, 0.026% historic probability of the occurrence of 2 days in a row with little distorted. Okay, let's fix that. Test. Sound should be good now. There, the 2 days in a row where okay, 2 days in a row where we had the initial balance stat, the IB stat, not breach. The instance of that in the last 15 years is just one. Only one time has the market come in and 2 days in a row not fulfill the IB stat, giving us a 0.026% historical probability over a sample of something like 3,700 days. So that's looking back 15 years. Did not expect that to take place, but hey, look at this market. It is definitely surprising everybody. So that's where we stand here this morning. And that's where we left yesterday. We finished near the open, but the delta finished near lows. Relatively weak delta coming into closing into yesterday's session. Point of control shifting down. We had a lower high, lower low. So the one-time framing that we've been holding on to here for a week and a half or so on the daily has come to an end. We're in a neutral posture coming into today. And yesterday's high is going to be important. That 32 even is going to be important to tell us if buyers are able to push towards that 38 to 41 um, 38 to 41 area. So hang on one second. 38 to 41 areas. So that's where it goes. That's what we're paying attention to this morning. So that's where that stands. Um, yeah, I'm not sure what's going on with the sound here. I thought I adjusted the sound and it should be okay. It's such a pain. Windows kind of takes over your sound equipment and does whatever it wants depending on the program that's running it. But I don't want to waste time on that. Coming into today's session, we finished relatively neutral yesterday. Again, on this negative delta, if you look here, pretty negative delta, negative 11,000. And then we open back up, we go sideways, we make this impulsive push up. I was doing my homework at this point, and then we just, boom, we hit. We have a sweep down or push down of about 11 points. That was at 8:30 or so last night, Chicago time. And then from there, you would expect a pullback and continuation, but no, just like the night before, right here, it just seems like somebody's just unloading, and then it kind of makes its way back. This is the second night in a row that we see this. It dumps, pulls back, and we spent most of the morning. We spent most of the morning right at the prior day's settlement, which was 44.2575, the official settlement on the cash close yesterday from the CME. We come back to unchanged on the S&P, and now we're pushing higher. This is very, very similar to yesterday, right in here. Right in here, we start to push into the open. Again, the overnight inventory is quite short, with most of the volume occurring below the close, but below yesterday's close. But here we are pushing back towards last week's settles. So this area here is quite embattled. We see 3 days in a row, Friday, Monday, and Tuesday, all trading in this area with succeeding lower points of control. We'll see where this point of control ends up after today's action. This overnight point of control gets superseded fairly quickly with the larger volume coming in after the cash open. And we'll see where that ends up. But to me, this looks like lower lows in value. We've been making lower highs, but we've held the higher low. And yesterday we broke the prior session's low. So to me, this looks like coiling balance, and we are about to find out what the next leg is going to give us. So barring anything new, just not seeing anything new, earnings have been strong. Everything seems in order. Barring anything new, I would expect it to continue to break higher into 44.50, the mid-century figure. And again, remember, 38 to 41 has multiple measured move targets. So those are kind of that's the lay of the land. That's how those are the main structures that are in front of us. So we'll see how things roll. This morning, we are currently above the full session VWAP, above the overnight point of control in a P-shaped profile. This is a rejection of lower prices, and therefore I expect it to continue and to work its way towards that 33, again, 38.41 this morning. That was scenario one yesterday. It is scenario one today. Okay, so what does everything look like in terms of the composite? So here we are, higher low, higher low, higher low, and then it gets canceled here, and we're going to see how they treat this 32, 33 area today. We are not far from it. We are just 5 points from it. So to me, this looks like about as good as it gets for the shorts. It is likely to continue higher. Okay. Let's switch gears and take a look at what's expected for today. Let me set that chart up. Here we go. So this morning, still overnight inventory is out of balance. It is heavy on the short side, still slightly. Um, the expectation is an open that continues to squeeze higher. Why is this a thin line? No idea. Expecting it to continue to squeeze higher, pushing this 29 high farther if it doesn't do so in the next 10 minutes. And then I'm looking for it to chop around before we start to migrate into the 44.33, last week's high, and the all-time high just above, full session all-time high, consolidate up here and then push into this 38 to 41 area before it stalls out. Ranges have been compressing over the last few days, so I'm not expecting too much, somewhere around 11 to 12 points. That's the primary scenario. This scenario is in line with the predominant trend and the fact that we're pushing these lows and coming back. We're pushing these lows and coming back above. So there's a tendency here to, again, the analogy I'd use is like a beach ball. It just you can force it down. It takes a lot of energy right now to force this ball underwater, and it doesn't take much relief in that pressure, in that force pushing down, for it to pop through the water surface and make new highs. This is the market we're in. It's like a beach ball that's being pushed underwater, and as soon as you let go, it just pops higher. This is what we have until this beach ball flattens or gets flat where it'll sink, and it'll be obvious to us when it does. We have to assume that it's going to continue to do so. The secondary scenario, open auction that squeezes higher, pushes the high, and then is faced with impulsive selling back to the overnight point of control at 25, 21, and then again for the third day in a row, I'm looking for a tag of the 15 at least for us to kind of clean up or complete the structure that we see below us. So we have a composite low volume node here, and we're building volume. And I'm looking for this composite low volume node as well as a former high to be tested. It has not been able to do so. We're opening in range in value, so don't be surprised if it's choppy as well. But the way this is set up coming in is it's likely to squeeze that high relatively early. Does that make sense? A quick word here in a trade wisdom segment that I wanted to share with you. There's a lot of talk about psychology, mindset, the importance of understanding the psychology of trading. And there's a lot of emphasis on tools and charts and software packages and indicators and methods and order flow and so on. But I've got to tell you that a common thread that I'm noticing is that those people who are not aware of their level of anxiety. Apparently, I was speaking to a physician yesterday, and he said that statistically speaking, about 60% of the population suffers some form of anxiety. Short-term anxiety is normal. You have a speech, you have an exam, you feel anxious, and so on. That is okay. That's just a fight or flight response, and it helps us prepare for what's coming. However, a huge segment of that 60% has continuous generalized anxiety disorder. You'd be shocked at how many people have this. The question I have for you is, do you believe you're an anxious person? Are you an anxious person? Are you a person who worries even when there's nothing to worry about? If so, this is the biggest thing, in my opinion, that is working against you performing or executing or thinking clearly when in a trade or managing emotions. This is something that I'm not fit or licensed to take care of, but this is something you'll want to discuss with your physician. Um, with your physician, this is something, if it's something that's impacting your life but is not debilitating, you'll want to go to therapy where there's time to work through the pieces. I have anxiety. I didn't know it, but I have anxiety to an extent. But being aware of it really gives me an edge in all aspects of life. So I just want to tell you this. I know you're getting a lot of advice from a variety of people, but if you're starting at the level of someone who jumps to anxiety or gets anxious or fearful very easily, or it's something that is pervasive in your life, do yourself a favor and see someone about it first. Because if you can remove this obstacle just to start, if you can remove this obstacle, I think you a lot of clarity will come when it comes to trading, when it comes to execution, and so on. So we can sit here and talk about the markets all we want, but if fear is a big piece, it is really hard to see what the market's doing if the logic process within your mind is distorted by generalized anxiety. So get that diagnosed. There are medications for it, or there's treatment for it through therapy and so on and so forth. I'm not qualified to provide a recommendation, but this is really important. It is like driving with blinders on. It gets a lot easier when you take the blinders off to see the road, right? I can talk about how to drive all I want. I can do it every morning here, but if you can't see what's in front of you, that is going to be the first obstacle. So please go take care of that. There is nothing wrong with getting a mental coach. We get treatment for a bruised leg, a broken leg. We get treatment for asthma, for diabetes, for whatever. There are also treatments for our minds. Don't be embarrassed to go find treatment. Good luck.